Welcome back to the channel, everyone. Today is a very special day. We got Stephen Ward, CEO, founder, creator of VyFinance, here for our first ever interview, which is really awesome. If you don't know about VyFinance, this is going to be a very powerful video for you to expose you to one of the more original pioneering DeFi projects in all of crypto, built on the Cardano Blockchain. If you don't know about VyFinance, also something unique about VyFinance is they were the fourth ever CNT. You might hear us throughout this video talk about what a CNT is. That is a Cardano native token ever minted on the Cardano blockchain. That's pretty impressive. And Steve, I'll let him introduce a little bit about himself. He has a financial background. I think it's an interest bonds trader. So that's actually really cool because he had experience trading currencies, which is basically what liquidity pools are. And so had this idea to form his own DEX, his own decentralized exchange, after managing a hedge fund with his friends and family, which I wish I would have been a part of that invite. And so, yeah, Steve, is there anything else you want to do to like talk about yourself, an intro, who you are and how you got the VyFi?
You've obviously done your research, so you know who I am and what I've done. Yeah, I was specialized in bonds, so I was a bonds trader, and I was looking mostly at treasury notes and interest rate swaps. Just to give a brief idea of what an interest rate swap is, because it is currency trading. It's like currency trading plus, I guess you'd say. I have a bond that offers, let's say, just to keep numbers simple, right? Let's say it offers a 5% return. That's the coupon price. That's what they call it. So you get a 5% return on the bond, but there's a bond in America where I can get a 7% return. So my Australian bond's got a 5% return. My American bond's got a 7% return. And then in Europe, there's a bank account that offers an 8% return. So now all of a sudden, there's these different instruments around the world offering interest that give you different values, right? But what's hard about it is that these values are also denominated in that currency. So if I'm an Australian dollar and I'm getting 5% in Australian dollar, I can exchange my Australian dollar to euro and I can get 8% in euro, but now I've taken on euro currency risk, right? So I borrow at 5% here, I send it to euro, I put it in and I make 8% there. I'm making a 3% arbitrage between AUD and euro, and now I've got the currency risk that I hold. So that's what an interest rate swap is. So they're a little bit currencies plus, right? And from there, I basically, exactly as you said, started up doing my own sort of fund in DeFi specifically back in 2019, and that was with friends and family. We went into DeFi summer. We did really well using a lot of those DeFi systems, though I saw a lot of problems with them, both from a structural perspective as well as from a tokenomics design perspective. My background being like my studies were physics, and having that sort of combined quantitative background with my knowledge of economics, which I'm actually working and breathing and living it. I decided to sort of design my own tokenomics and design my own systems around that tokenomic to improve those problems that I saw.
That's incredible. I started getting into the blockchain cryptocurrency trading and investing space, probably like everybody else, with Bitcoin and Ethereum and ERC20 tokens built on the Ethereum blockchain. And Cardano is so unique because it's like a native token built on the blockchain, which is different than what an ERC20 token is. And the gas fees, like you said, and the tokenomic structure and the latency, the time. And so, yeah, it was a move when I started to move over to the Cardano ecosystem. People did not understand it. And I'm sure you might have gotten the same sort of feedback, but as time goes on, it makes me more and more comfortable having made that difficult decision back then, when, now my friends are like, wow, hindsight is 2020. So what you have been able to do with VyFi is interesting in so many different levels. Most people who are watching this video might be completely new to VyFi, but they might be completely new to decentralized exchanges and how you provide liquidity. So just briefly, you want to start?
that.
Yeah. talk about how you provide liquidity, right? Like how does somebody get into DeFi rather than just keep their Cardano in the wallet and let it stake and get rewards that way?
Mhm. So let's talk about what a DEX is, right? Actually, let's take a second and talk about what decentralized finance is. Let's take a real step back. So decentralized finance is simply the act of placing financial services on the blockchain. Now, as the blockchain, you're dealing with an asset that contains value. You'll find that you'll be able to implement a lot of the similar financial services that exist in traditional finance in a manner that's decentralized. I will assume the people here understand what decentralization is. Just means there's the easiest way to understand it. There's no middleman that's taking a cut. Now, when I go to a bank and a bank wants to perform a currency exchange, let's say between an Australian dollar and US dollar, the bank has to have two large piles of both currencies available to them. It needs to have a big pile of US dollar here and a big pile of Australian dollar there. I come in as an individual and I go, hello, I want to trade 100 Australian dollars for US dollar, please. And the bank goes, no worries. I'm going to take your 100 Australian dollar and put it into my Australian dollar pile. And then I'm going to grab the equivalent out of my US dollar pile and I'm going to give you that. And then we're going to take a cut for ourselves, 3 or 4%, right? So in other words, I should be giving you 60 US dollars, but instead I'm giving you 58 US dollars. So my US dollar pile kept $2 in it. Or you can think about it equivalently, my Australian dollar pile grew by more than what my US dollar pile shrunk by, right? What I just described there is liquidity provision in a traditional finance setting, right? It's a bank that's got, or a currency exchanger that's got lots of two currencies and allows people to swap between those two currencies through him or her. On the blockchain, we don't have the good fortune of having a agent that contains these tokens that's able to run these exchanges on our behalf. We have to get all of the liquidity, i.e. both of the piles of currency to allow people to swap in between. We have to garner that from the blockchain itself. We have to get that from the community so that we're able to support a system that allows for the financial service of swapping between currencies. Now, because we need to garner that from the blockchain itself, we have to create an incentivization model. You as a user, what is your incentive to be putting both of your currencies into a system that contains risk? It's called impermanent risk, and we'll go through that a little later, unless you're receiving a return for it. Now, what we do is we provide a return in our native token, VyFi. So if you provide liquidity, we pay you in our native token in return for having done so. Now, this is one of the things that we've changed completely on our DEX. And if you don't have experience with DEXs, this might be a little meaningless to you just yet. But for those that do have a little experience, this will mean a lot. We don't actually have farming, or it's called farming, sorry. When you're earning a DEX token, that's called farming. And on the VyFinance DEX, we've got what's called stakeless LP farming to make it even easier for new users. So that means once you've provided liquidity, you're automatically earning your farm and you don't need to do anything. Your LP tokens, or the tokens that represent your ownership of the liquidity pool, remain in your wallet at all times, which is a really cool innovation that we've brought in. But that means it's really easy to provide liquidity on our DEX, right? So we've got a Zap feature that lets you just swap with one token. And actually, can I share my screen?
Go ahead.
Yeah, here's our DEX.
Yep.
I haven't got a wallet. This is a new computer, so I haven't got a wallet connected yet. So I can't actually show any functions. I can just show you the DEX. I wasn't that organized, sorry. Add liquidity is as simple as selecting add liquidity on our DEX. Select the two tokens that you want to add liquidity with. Let's say Cardano and VyFi. Of course, you have to connect your wallet, which I don't have. And then you just select how much Cardano you want to add. Now we have a Zap feature, which makes it even easier, right? This Zap feature allows you to only add one token into liquidity. So we could do ADA to ADA AADA, and I can just add 500 Cardano, and that's going to automatically send me back my liquidity pool tokens. And the beauty is, as soon as my liquidity pool tokens hit my wallet, I'm going to see my estimated daily rewards appear. And every 24 hours, it moves down the road. So it goes to pending rewards and then becomes available rewards after 48 hours. And that's really how easy it is. It's 2 buttons. It's 2 buttons to add liquidity and start farming. It's never been this easy in all of crypto.
No, yeah, it hasn't. It's very the user interface, is very intuitive. I've appreciated the vaults. That has been so much fun to just play around with over these months while we've been waiting for the DEX to launch, where there's just like this continuous ticker where you're seeing real time, like your tokens growing. And that is just wonderful to just look at. I mean, you refresh your screen and it's up to date. It's very fresh. It's very fast. And I want to get into also that you guys have multiple transactions that can happen, stacked transactions, I think they're called, where in normal DEXs, you have to, if you're initiating a transaction or a swap or a trade, you need to then wait for that transaction to surpass before you can do another one. And sometimes you want to do more than one transaction at a time, and that doesn't exist until VyFi.
VyFi, exactly. So what our stacked transactions allow, and I do want to add, there's a little caveat to that. You can't stack transactions on the same swap. So if you're swapping out of VyFi, I can't stack 7 out of VyFi transactions. What you can is limit orders, not as market orders. What I can do, though, is I can swap as many liquidity pools simultaneously as I'd like. So I could do ADA VyFi, ADA AADA, ADA Shen, ADA IUSD, ADA JED, VyFi JED, IUSD VyFi, and then we'll finish off with a bit of ADA Nebula. Why not? Right? And you could literally go through the list, press them, put in the number, sign the wallet, go to the next one in the list, put in the number, sign the wallet, and you can literally just stack them up, right? And you'll just see 8 orders stacked, and then they'll all go through. And the reason we're able to do that is because every single one of our wallets has its own every single one of our liquidity pools has its own validator. Now, in Cardano, what a validator is for a DEX is a validator is essentially the machine that runs the swap transaction. So the swap transaction comes into the bucket of transactions waiting to go. And then the validator for a particular swap will go, oh, I'm the validator for Copy, and there's a Copy swap. So I'm going to grab that transaction and I'm going to run it. Our validators on other sets of DEXs on Cardano, they've built their validators to be grouped. So you might have 2 or 3 validators, and they essentially run groups of liquidity pools together, i.e. this validator runs these 15 liquidity pools. So that means that as you have transactions coming into any one of those liquidity pools, I can't actually run a transaction on the same liquidity pool until the validator is passed, and that's PARSed, past my previous transaction. So there's essentially a line that everyone has to wait on in the validators for their turn. Because of us having a validator for every liquidity pool, you can throw your transaction into every liquidity pool one by one, and it's not going to interrupt the previous validator's operation.
What you see when you are interoperating with min swap, ring riders, Sunday swap, Muesli, or whatever, where it's time. I mean, sometimes it can take a long time, and that time could be, time is money. So this is wonderful. Another thing I really enjoy is that on the other DEXs, if now I want to harvest my rewards, I think MinSwap, you can harvest up to 5 pools at a time, right? The DEXs are trying to do things, but what I love about VyFi is there's unlimited harvester. In fact, there's no way for you to just harvest one. You can have over 30, 20 pools and click one button with one little transaction fee and harvest every single one of those pools at once. That's absolutely incredible.
Yeah, that's one of the best. That's one of my favorite innovations of the entire thing that we've done. What we really wanted to do, right? And this was the core philosophy that we had while building our DEX. Everything that we do, we want to minimize the process and user flow for the capacity to perform that function. So farming was a really classic one, right? And I farm a lot on MinSwap and Wing Riders and all of them. And I mean, not Sunday because they don't have farms. But excuse me. So I had to realize, like, it's just obvious when you think about it, right? I have 10, 15 liquidity pools and I have to run 10, 15 transactions. Because of the way the validators are set up, every single transaction, I have to wait those 2-3 minutes before I can send in the next one, which is already annoying. If I've got myself, the fees, because now I have to pay the fees for every single one. It's just an inefficient system. But yeah, we
Cumbersome.
decided to reverse. And exactly as you said, we reversed on his head. We went, well, why would users want to withdraw one at a time? Like, the only reason you do it, like, I can see a reason why a user's like, oh, I want to let this farm build up a little bit more, and then I'm going to press the button here, and then I'm just going to take that one. But even if we design it in that manner, that's just really giving us the opportunity to take more fees off users that we wouldn't need to take. Right? So rather than take fees off users that we don't have to take, we just bundle it all into one transaction and no one has complained. I've never had one person say, hey, I only want to farm this one. Can you stop me from farming the others? We've never had that. Everyone's just gone, oh my God, I can farm 30 things at once. They just go farm 30 things at once. Motivates you to spread out your liquidity.
Yeah.
You're not stressed, even if you're a small holder. You're not as stressed about putting 500 ADA into liquidity of WMT, for example, 500 into Copy, 500 into AADA, and 500 into VYFI. Because you're not going to have to spend, 3 Cardano every single time you harvest every day for all 4. It's just once.
It allows the user to diversify and in a much more cost-effective way, and also saves time. I love that. I mean, I'm everything about me is time. I like to manage my time properly, and time is money. We already said that, and it's very important. I think users, with the competition out there, it's going to be one of the pluses that attracts people, because yeah, I mean, people are trying out, they have these little tokens, they're part of an ISPO, they get an airdrop, they have a few tokens. Why not throw it into the liquidity pool, see what the whole experience is, and then just kind of get comfortable with that. And that kind of that leads me to think of the next unique feature that you guys offer, which is the L2 LP pools, the layer 2 liquidity pools. So with those liquidity provider tokens that are sent to your wallet that you said are now just farming, which is incredible. I mean, without, the traditional way that you provide liquidity is then you'd have to take those liquidity provider tokens, sign another transaction get the farm into the DEX, choose the farm, sign another transaction to stake those liquidity provider tokens to begin farming, and you're cutting that completely out of the process. As soon as you provide liquidity, you're now staking with those liquidity provider tokens, but you found out a way to understand that there is value, right? Like, people would say the liquidity provider tokens, they're just a receipt of your liquidity pool. So then when you lock them into the smart contract, into the farm, it's basically kind of wasting that value, right? And you guys are saying, no, there's actually value. It represents both halves of that pool. And you can then take those liquidity provider tokens that are just normally wasted, and you can provide them into a layer 2 liquidity pool. Brilliant.
Absolutely.
Talk about that.
That's a great description. Let's go back to our example of bank, where the bank had those 2 piles of money and the people were swapping between these 2 piles of money. Let's say the US dollar, I'm going to describe impermanent risk a little here, because the impact of our L2LPs is very much intertwined with impermanent risk itself. So if I have the Australian dollar goes down by, let's say, 5%, that is, at the moment, that's happening a lot because the commodities markets are dumping and Australia is the commodities currency. So we have the Australian dollar that goes down by 5%. From an actual mechanical perspective on the market, if the Australian dollar is going down by 5%, what that means is that users or people are selling AUD. So from the bank's perspective, I'm receiving a lot of AUD into my AUD pile. My AUD pile is growing, and I'm handing out a lot of US dollar, and my US dollar pile is shrinking because all these people are swapping, giving me their AUD, and I'm handing out the USD. Now, whilst that's taking place, what's happening to my USD pile? Well, that's getting smaller. And my Australian dollar pile? Well, that's getting bigger. But what's happening to the Australian dollar whilst my Australian dollar pile is getting bigger? Well, the Australian dollar is losing value. We've just lost 5% in the Australian dollar, right? So my pile of Australian dollar that's now bigger is also worth less. And my pile of US dollar that's smaller is now worth more. In other words, I've lost the asset that's gained value and I've gained the asset that's lost value. That's impermanent risk. A tendency within a liquidity pool to gain the token that's losing value the fastest. Now, I should add, this is relative value. It's not objective value. So that means in an ADA VyFi liquidity pool, my impermanent risk isn't going to take place on the value of ADA USD and VyFi USD. That's not what my impermanent risk is based on. My impermanent risk is based on the relative value of ADA to VyFi. Right? It's the relative value between the tokens, not to another third-party token. Just want to add that for anyone who's a trader, and we'll conceptualize that. Now, if I have a liquidity pool which is experiencing impermanent risk, which it does, your first question as a user is, how can I minimize my impermanent risk? Now, let's look at this process of impermanent risk between two tokens. I have ADA VyFi. VyFi goes down in value, so my liquidity pool gains VyFi and loses ADA. I've experienced impermanent risk. My ownership of that pool and the percentage of both tokens is held by an LP token, right? And I've got that in my wallet. Now I've decided, well, I want to try out these layer 2 liquidity pools, L2LPs. So I put these liquidity pool tokens into the L2LP. Now let's think about what's happening as VyFi goes down in value here. As VyFi goes down in value, in my liquidity pool token, I am gaining VyFi and losing ADA. But in my layer 2 liquidity pool token, that means the net LP value is going down with respect to ADA, which means I am getting put ADA into my layer 2 liquidity. So that means in my layer 2 liquidity pool, my LP pile is growing. Excuse me. So once I am losing value in my LP through the layer 1, I am gaining LP token through the layer 2. When you run the numbers, it reduces your effective impermanent risk by about 50%. So the layer 2 liquidity pools are a hedging tool against base impermanent risk between the two tokens. So there's a fantastic tool for experienced traders that understand impermanent risk and want to give themselves a further edge against a token's price action. They're able to engage with these L2LPs. Now that's the advantage. Yeah, it's really cool, isn't it? Because exactly as you said, you've unlocked the value in the LPs and you're able to use them for a real purpose that provides a useful tool as a trader. And we're also able to boost farm on it, right? So we're able to pay you out a little bit more for engaging. So we're giving you less risk and more reward. Awesome. From a new user perspective, and this is the one that's really cool as well, we've created a market for LP tokens. So you can go to the swap screen, you can just press, I want 100 ADA of VyFi LP, press the swap button, and then as soon as that LP hits your wallet, you're instantly farming. So the process for a new user to get engaged with liquidity, we went before how you can provide liquidity. You don't even have to provide liquidity. You just have to run a swap. If you're a new user and you can swap, you can literally just go, okay, I'm going to swap for LP, enter, confirm. I'm already farming because as soon as the LP swap's complete, I'm already farming. It's done. Your entire job to go from 0 to being a liquidity provider and farming is a single swap, which is the easiest process that ever existed in crypto ever. There's never been an easier DEX than that.
Absolutely, especially in some emerging markets, like a lot of what Cardano does in Africa, where there's not much understanding of finance at all. And now we're gonna onboard an entire population of people that don't even have traditional finance, let alone DeFi experience. VyFinance, in my opinion, is going to make that experience of onboarding this whole new population of financial, users a way to get involved without the complexity. So it's really something to appreciate that VyFi has taken these measures to make it as easy as possible.
And that's exactly what you said, back, and I was saying this a bit in my old interviews. This is something that I was really passionate about. I mean, of course, I'm still passionate about it. I guess I should say from a speech perspective, I was talking about it about a year and a half ago, when we were really focusing on how our design was going to look. And then we kind of had to hide it from everybody because we didn't want any of the competition to see all these changes that we were doing. And all of these design implementations, we didn't want them to take it from us, of course. Um, so you have these nations of people that have never even used a savings account, which is, not their fault, of course. They've never had a traditional loan. They've never held, they've never held a credit card, let alone a debit card. And now we want to onboard them to crypto, and we expect them to be able to manage impermanent risk, collateralization ratios, liquidity provision, all these what are already advanced financial tools, which they do have their own equivalent in the financial markets. Liquidity pools, I actually use in my head, the equivalent of a liquidity pool is an interest rate swap. An interest rate swap is where I get both tokens and the tokens provide me an interest. Oh, sorry, both currencies. I swap one for the other and they provide me an interest. With a liquidity pool, what do? I take one currency, I swap it for another, I add it to liquidity, and it provides me an interest, right? So an interest rate swap and a liquidity pool is very similar. In traditional markets, the general population aren't even allowed to engage with interest rate swaps. You need a minimum coupon, you need a minimum value of, I believe the minimum contract value is $1 million for a bat spread, which is an Australian US interest rate swap. So, I mean, these are advanced tools that are used in hedge funds and for advanced investment tooling that are being presented to the general population. And as a result, we need to simplify this process to allow more people to use it effectively within a portfolio structure. And right now, I'm actually doing a Twitter space with Cardano, where I am describing the actual trading functions and how liquidity pools are used within a portfolio structure, and how you use impermanent risk itself as a hedging tool. Because impermanent risk is a hedging tool. It's not, you should be trading impermanent risk itself as a trader. You're engaging in LP tokens. You're trading that impermanent risk. It's not just something that's taking tokens away from you. Right?
I like I I like the concept of impermanent gain, actually, right? Like impermanence gain. I mean, it's all on how you look at it. If you believe in both of these tokens, if you believe in ADA or VyFi too, as well, then believe in the projects, or you're into World Mobile or whatever. If I have a little less World Mobile and the volatility, and a little more ADA, or a little less ADA and more World Mobile, I mean, I'm kind of, I'm not that upset. Um, so that's fantastic. I mean,
That's
there,
that's a
and
great point. That's a great point.
yep, yep.
So I'm disagreeing with you. Continue. I'm just
No, tell me.
well, look, it's just, and most traders, and this isn't their fault, right? I spent years working as a trader, so you get a perspective that's slightly different when you're doing it from an institutional perspective. Most traders think of their positions as tokens, right? I hold WMT, and I have this much WMT, and then I hold Bitcoin, and I have this much Bitcoin. That's a very primitive way to think of trading. If you're thinking of trading in that perspective, you're already putting yourself on the back foot, because you're worrying about the price action of all these individual things that you're holding in one go. And that's going to run you to the ground, right? You need to think of it from a portfolio perspective. So I've got a net portfolio that's worth $10,000, and it's split up 20% ADA, 20% Bitcoin, 20% Ethereum, 20% AVAX, 20% Sol, right? Whatever it is. With my 20% ADA, I've also got in a subset 5% World Mobile token, right? So now of my total portfolio, I've got 5% World Mobile token, 15% ADA. Let's look at the ADA portion of my portfolio. The ADA portion of my portfolio, which makes up the 20%, let's turn that into 100. So I've got 20% WMT, 80% ADA within that 20%. I'm going to match that 20% WMT with 20% ADA and put that into a liquidity pool. Now, 40% of my Cardano portfolio is working for me. It's off earning interest. And most importantly, that 20% of WMT that I hold, because I'm in a liquidity pool, it's going to experience half the price risk. As it goes down, I'm going to be earning more WMT through impermanent risk, which means I'm going to be losing less value. As it goes up, though, I'm going to be earning more ADA through impermanent risk, which means it gains less value. But as it goes up, whilst I'm gaining less value in my flat WMT, the value of my portfolio is still going up. I'm earning money. People are giving you ADA for that WMT. You're going up. You're making money, right? And you've been able to make that money whilst earning an interest and hedging your risk in the base WMT token, right?
Love it.
These are the kind of tools that people use, that, hedge funds and traders, at higher levels use all the time, because I'm trading in German companies, and I'm trading in US companies, and I'm trading in Australian companies, and I'm trading in Japanese companies. So that means at any point in time, 15% of my portfolio is in yen, 20% of my portfolio is in USD, 50% of my portfolio is in euro, and then the remainder is in AUD. Right? I've got these currency structures that I'm dealing with. How am I going to protect myself from the currency risk between these structures? I swap the risk, right? I do an interest rate swap. Exactly how I said this is very similar to a liquidity pool, right? I'm taking that currency, I'm swapping it for another currency, and then I'm engaging with an instrument that gives me an interest for holding the other currency that I swapped it out for, and in return getting myself access to that other currency's currency risk, right? So these tools are used as hedges to protect your wider portfolio and give you price stability. People that think of their token from a singular perspective, sorry, just to finish, people that think of their token from a singular perspective think of impermanence risk as something that is draining your tokens away from you. And that is just not a correct conceptualization.
Now, I mean, that's when I was, I had a lot of time to do my own technical analysis and fundamental analysis on what providing liquidity was. Us in the Cardano ecosystem, we have the advantage of looking at how things were done on the Ethereum side of things. And so I had a lot of, time to research PancakeSwap, Uniswap, what was going on there. And so that by the time these DEXs started to launch in March of 2022, I felt a lot more comfortable about what impermanent risk was and permanent loss. And I looked at it like how you're saying it. It's almost like a feature that is buying and selling for you in these different ways. And and once the markets sort of restructure and volatility goes back, and these pools always sort of level themselves out, and you're getting farming rewards also. And another thing that brings, like, hearing you talk, what comes to my mind is all these arbitrage opportunities. And maybe people don't understand what arbitrage is, but there is no DEX in all of crypto that presents as much arbitrage opportunity as VyFi, especially with the layer 2 liquidity pools. And, we didn't even get into the VAR yet, right? So
let's actually talk about the bar for a moment. The bar is one of our really unique features that we're super proud of. It's a first in Cardano, and it's a distributive mechanism for the fees that are earned across our ecosystem. So a user takes VyFi and they deposit it into the bar, and then that mints you XVyFI, which, much like a liquidity pool token, represents your ownership of all the VyFi that's in the bar, right? It's a representational token of ownership. You take this XVyFi and you can go provide that in liquidity. You can go put that into layer 2 LP. There's a few things you can do with that. So you can do stacked strategies here. But what the bar does is it collects the fees from our DEX, 0.1% of every single swap. And then it uses those fees to buy VyFi back from the market and then put it into the bar. And we call that a serve operation. We're buying VyFi back from the market and we're serving that VyFi back to the bar. And when we serve VyFi, we don't mint any XVyFi. It's just VyFi goes in and no XVyFi is minted. So as an example, let's say at the beginning, I have 100 VyFi and 100 XVyFi in the bar, right? We have about 100,000 volume on our DEX, and that 100,000 volume produces 100 in fees for the bar. Now, 100 in fees for the bar is used to buy VyFi, and then it's deposited as a serve into the bar. So let's say it's a 1-to-1 to keep life nice and easy. We get 100 more VyFi. So now the bar gets deposited that 100 VyFi, so it has 200 VyFi in it now. But we still only have 100 XVyFi minted. So you as the user, the next time you come back to the bar to burn your XVyFi to take your profits, you're going to be receiving 2 VyFi for every 1 XVyFi that you hold. And in that circumstance, you would have had a doubling of your price, of your value of XVyFi, right? And the bit that's most important about all of this is that this is a sustainable system of return. We're using real income that's built from fees that are generated across all the markets on our ecosystem. And we're using that to perpetually rebuy VyFi from the market to provide price support for both our farmers and for the people who are engaged with the bar.
That's always going to put upward pressure on the VyFi token price also throughout time.
That's it. That's exactly it. It's that perpetual upwards pressure, right?
So let's say I put in 100 VyFi and I get like 100 XVyFi. And
let me share my screen. Let's look.
And then I take that, and then I have that XVyFi. What if I then choose to zap that XVyFi into the native XVyFi farm?
Here you can see that one XVyFi is currently worth 1.044097 VyFi, right? So if I do 1 VyFi, for every 1 VyFi I put in, I'm going to be currently getting 0.957765 XVyFi. Here across the top, we've got our previous serves. So there's generally a serve every 24 hours or so. And every serve here, so here was one for 3,014 VyFi. So that's collected fees that have been used to buy VyFi from the market and deposited into here. And we can see the TBL, we've got our XVyFi minted here and the total amount of VyFi that exists there, that exists in the bar, here. So if I mint this XVyFi, let's say we mint 95, so 100 will be 95.77. I need to connect my wallet. I mint, it arrives. I can then go exactly as you said to our DEX. I can then go to add liquidity and I can just zap this XVyFi straight into the XVyFI data pool, right? ADA XVyFi. So I would have 95 XVyFi, boom. I submit that, it goes straight into the ADA XVyFi pool. And now if we go to home, you're going to see yourself automatically start farming right there. And currently we've got a 72% APY on the ADA XVyFi farm.
Then you can take those LP tokens that are in your wallet and stake them, right? Also.
Exactly. And that's exactly it. So then you can take those VyFi, ADA XVyFi LPs and you can go add it to the ADA plus ADA XVyFi LP. So this is our L2 LP. Right? And at the moment, our L2 LP's got a boosted reward. It's got 94%, right? So it's paying more than the L1 LP right now. So that means that you can take your L1 LP, match that again with Cardano, reduce your impermanent risk by 50%, and also receive a boosted reward for holding it. How incredible is that? And I also want to add, I think that was a bit of fun. 3 or 4 days ago, or 2 or 3 days ago, our L2 LP for VyFi was the 19th most traded token on Cardano DEXs. So in one day, we had VyFi was the second most, XVyFi was the 6th most, and the VyFi L2 LP was the 21st most traded tokens in a day. So I was really proud of that.
That's amazing. I think on Tap Tools, I saw it at number 1, maybe even today, with the most volume.
XVyFi's volume at the moment is very high.
And I've been steadily seeing, I've just been steadily seeing VyFi increase, move all the way up through DeFi Llama, which are other great sites to track, what's going on in DeFi there. That's awesome. So you have this bar that collects the fees and, you can have ownership of the bar. That's the first thing I did. I was like, oh, I love this whole process. It's fun. It actually makes the experience of providing liquidity, getting into DeFi fun. And you can do it slow. You can do it easy. You can go as easy as you want, or you can go as complex as you want, right? And in just by natural usability, you become more familiar with DeFi when you're participating in the VyFi DEX. So that's fantastic. I also noticed that there's this thing called the lottery. I haven't seen that anywhere else. Talk to me about what the lottery is.
Yeah, so the lottery is our, it's a lottery. You buy
It's
lottery
really,
tickets and
yeah,
you have a chance to win.
it's
Pretty
fun.
proud of ourselves. So that was that was actually our unique design. I architected that myself. I was really proud of that because no one had released a lottery yet, and we were trying to think, how can we use the chain itself to be the lottery for us, right? We want it to be on chain. We don't want it to be centralized. Um, so what we do, how it works is you buy a lottery ticket. At the moment you buy a lottery ticket, we actually take the last 4 digits from the transaction hash of the transaction where that lottery ticket was bought. And we can actually count up the transaction hash in units of 4. So you can buy up to 16 tickets at once because the transaction hash has got 16 units of 4 that we can count along. At the point that the timer reaches 0, we take the block at the time that the timer reaches 0, the next block, we take the last 4 digits of the block hash of that block, and then that's your winning ticket number. So then it compares the block hash of the block at the winning time to all of the transaction hashes that have been bought as lottery tickets. And then depending on whether you match 1, 2, 3, or 4 of those letters, of those hexadecimal numbers, I should say, you win, right? And you win accordingly. We've had actually a lot of something that I'd say we have to reduce the price of our lottery a little. It's currently 25 VyFi, which is a little bit hefty because our price went up a lot. So we're looking at reducing that down to maybe 10 over the next week or two. Unfortunately, just with the amount of scalability and work that we've had in the last 2 weeks, as I'm sure you can imagine, 3 weeks, we haven't had time to adjust our lottery yet, but that's definitely in the works.
No, it's wonderful. I remember seeing a video you did maybe a year or so back when you guys voted on your emissions rate, and that really made me understand the governance and all of that. And I'm sure that, some of the lottery stuff or some of the features that are going to come on the DEX, there's a governance tab there where that's a big aspect of decentralization that I'm, passionate about. I love participating in the governance of projects where it sort of measures the style of decentralization. And I love your emissions rate. That is another thing. I remember we're outside of Philadelphia, right? We're the city of firsts, right? There's the first of that's what we're known for. This was the city that sort of modeled the city for the entire structure of America, really, right? Like all the cities sort of banked the first fire company, the police station, printing press, library. It reminds me a little bit of this Project VyFi. I mean, the emissions are really unique. 21 years you have, and then perhaps governance could take it more like 35 years.
Governance could do whatever it wants with it. That's the governance.
So it was so impressive that governance decided to cut emissions in half for the first year. And
Yeah.
so there's like increasing rewards over this first year, I am excited about the emissions where
Yeah. So let's talk about the emissions there as well. This is one of the most this is one of the designs I'm proudest of in our system. And when we spoke at the beginning about me seeing issues within the actual structural design of the tokenomics indexes, our emissions is one of my solutions to the structural designs that I see in indexes. We have a long farming period. And this is designed purposefully to give the opportunity for long-term rewards over an extended period of time. You can go the pancake swap option, which is it's an unlimited supply, like the supply theoretically never ends, but that's not something that we wanted to do. You could go I don't want to name names within our own ecosystem, actually, so let's avoid doing that. What is really important to me is that with any emission supply, your emissions remain on a day-to-day basis lower than your expected volume on that token for that day, right? That's just really important, right? Now, if we take, for example, our emissions, we're currently farming out 20,000 or 22,000 tokens a day, right? 22,000 tokens a day, we can compare that to some of the competition in our own space, and I'll let you guys do that yourself, but you'll realize very quickly that that is the most controlled emissions rate in this entire environment. And secondly, the way that our emissions are designed is that I can be fairly confident that I'm going to be able to return those tokens to you for the next 20 years, right? And as long as we have, commensurate growth within our system, for example, if we wanted our system to keep its current value now in 20 years' time, we would need to have a market cap of about 800 million, right? And our token would still be 300 a pop in 20 years' time. That sounds like a lot, but we've got 20 years to build this space and build this ecosystem, right? And that's already, what, a third of the total market cap of some of the competition on Ethereum? So when people tell me that there isn't space for growth in our token, I'm just like, then you don't know what the competition are doing and you haven't looked at the competition, right? Because I could have all of our tokens on the market right now and we could be half the size of Uniswap and our token is worth 3 times as much as what it's worth now. And that's with everything in supply, right? So, they're really worried about this FDV. I mean, I just say to them, first of all, it's 20 years time. You don't base a stock's value on suspected future stock splits. The stock's value is based on how many stocks exist now. That's how you value a stock, right? So that's my first response. And my second response is, assuming we're in Cardano, we believe Cardano is going to grow and we believe Cardano is the place to be for crypto, assuming that this dream, even a quarter of it comes true, I mean, there's no reason why a Cardano DEX shouldn't have similar sizes to an Ethereum DEX. And if you don't believe that's possible,
Totally.
maybe you're in the wrong eco.
I think 300 million is extremely small. I mean, I see billions of dollars on these DEXs. I mean, not financial advice or what have you, but I see Cardano winning the smart contract game. What the Plutus, what's been done with the Plutus smart contracts and the EU TXO model, and what you guys have been able to showcase and express with that extended UTXO model. I think other projects will be there, and I am seeing Cardano take a hold of that smart contract game, which is, I don't know. I mean, how many trillions of dollars of value can you put on that overall? I mean, who knows? But it's been such a pleasure. What?
I do want to add to that just really quickly. Last thing.
Go ahead. Yeah, no. I mean, I was just going to say that I could sit here and talk to you all. Like, I'll just take, we can just keep going here, man.
Thank you so much for your kind words. So with respect to like the Cardano smart contracts, right? We have been moving really quickly in this space, and we had to redesign everything from the ground up in Cardano because it was a brand new design for the way both the logic of the blockchain itself, as well as the design, the structural design and architectural design of the smart contracts themselves, right? Everything was new. And I think that's something that we really tried to do at VyFi, and it's part of the reason why we released our DEX a year later, right? When we were sitting back and designing our DEX, we didn't want to look like DEXs on other chains. We realized that we had the opportunity, that we had an incredibly unique blockchain with an incredibly unique system of technologies that allows us to create a much more simplified, streamlined, and accessible DEX by implementing Cardano's technology uniquely. And I do truly believe that our DEX is the first true showcase of what Cardano's technology allows you to achieve with a DEX. From a structural perspective, from both a risk management perspective and from a user accessibility perspective, I honestly believe our DEX is the best that has ever been built. And I'm not just talking about Cardano, I'm talking about crypto. For the first time, you can go from zero to being a liquidity provider and farming in a single swap. One transaction, you're done. That's all you need to do. you can go from a single from a single deposit into the bar and then a single zap. You can go from being someone who has some VyFi token to now earning part of the distribution of the entire system, and also dual farming while you're earning from the bar, and creating a layered pool a layered farm, where you're also farming the liquidity. And then you're also adding that into layer 2 to create a 3-layer farm. You're earning from the XVyFI, from the layer 1 liquidity pool and the layer 2 liquidity pool, right? For the first time, we've created these systems of layered farming, which in turn, as you mentioned before, create systems of layered arbitrage, right? So all of these systems together create more income opportunities for traders. They create easier systems for new users to be able to engage. They create streamlined farming systems that allow people to save money on transaction costs. And most importantly, they are an enjoyable experience. As you said, they're fun to play around with.
Yeah. Yeah. I mean, and it's amazing. Yeah. And I appreciate it as a participator, engager in the space. I don't know if you have time. I mean, do you have time to talk about the Auto-Harvester feature?
Remember, our core goal is to try and simplify everything as much as possible for the user. So the next step in this is to create a system whereby a user can access multiple different liquidity pools simultaneously with the single click of a button. So the way that we do that is we create an auto-harvester, which is essentially an auto-farming machine. All you do is you put your Cardano in, you press a button, you say, how much Cardano do you want to go in? And then that Cardano will automatically get distributed between the farms that belong to that strategy. As an example, let's say you want to do DEX auto-harvesting. The DEX auto-harvesting would have 25% that goes to Min, 25% that goes to VyFi, 25% that goes to Wing Riders, 25% that goes to Muesli or Milk. And of these 25%, they each get farmed on the respective DEX. 25% goes get farmed on MinSwap, 25% gets farmed on VyFi, Wing Riders, and Milk. What we then do is we then essentially aggregate the farm. We deliver that farm back to the user. So all the user has to do to access their farm is deposit back the auto-harvester token, much like an LP token, right? You're going to have the representational ownership. You just burn it back at the auto-harvester and you take your profits. And the bit that I love the most about it is we take 10% of all the farm that we earn and we use it to buy VyFi and distribute to the bar. So that means we'll be collecting farm from other DEXs and using that farm from other DEXs to give even further price support for our token and liquidity providers on our DEX.
Wow, man. I don't know how you sleep.
I don't. Exactly. You hit the nail on the head there. One of the big things that I have to say about that, though,
okay, go ahead,
is that we really want to simplify that process of farming even further through this auto-harvester, right? And we want to be able to give new users the capacity to engage with liquidity mining without even having to hold liquidity pool tokens. And that's not even that's not even useful just for new users. That's also useful for experienced users like yourself. You know that you want to engage with 25% with, a portion you want to have across the DEX tokens, let's say. So you look at your portfolio and you go, oh, I'm going to put 25%, I'm going to put 5% or 10% of my portfolio into just this so I can just be involved in DEX tokens and I don't have to harvest. I don't have to sit there and manage my individual positions. All I do is decide when I want to get out and then I can just trade back and get out, right? Even experienced users will use these tools to simplify their portfolio management process. And I should also add that we're expecting to have this up by November. So sort of 3 months.
That's fantastic. Thank you so much. I mean, there's so many other little things that we could talk about, like your partnership with Dega, the audit. I love understanding about your audit and reading about your audit. So yeah, and so I'm just appreciative of your time and thankful that you were able to be so generous with your explanations on the complexity of what liquidity providing is and what DEXs are and DeFi instruments and all these complex terms that most people find intimidating. You're able to convey it in a very digestible way. So I'm excited for what VyFi has to come out in future versions.
Yeah, thank you. It's been an absolute pleasure. It's really been a good fun speaking with you. You know, I really appreciate anyone who is willing to take the time to learn these things. I am more than willing to give my time to help explain. I consider part of our role as building these systems, part of our role needs to be education. And we need to be out there engaging with the community and showing them what these tools are, how they make your life better, and how they allow you to achieve financial freedom, hopefully in a manner that is easier to achieve, or I should say, um, provides a more concise path through which an individual can achieve financial freedom than just working a 9 to 5 job for your entire life.
Yeah. You know, the VyFi Learn segment in your white paper speaks to that. So I'm excited
And that's
for
what
what's to
I mean.
come. Huh?
Thank you so much. And that VyLearn is coming. VyLearn is coming as well. So, Rome wasn't built in a day, I think is the word.
Exactly. You know, and just inching along. Well, you guys are really accomplishing stuff. Congratulations on all the success. I think the DeFi summer for Cardano is upon us. And thank you all for watching.
Thank you for having me.